There's a fair amount of nervousness now in people about their investments, whether they invest through a 401k at work, Roth IRA, traditional investment account, because the U.S. stock market has run way ahead of stock markets elsewhere in the world. And most Americans have deafness to hearing how valuable it is to diversify your investing to outside the United States too. We tend to be very heavily focused and concentrated as Americans on U.S. investing, even though 75% of capitalism, somewhere between 75 and 80% of capitalism, is outside the United States. That's why I do so much outside the U.S. in funds, index funds, instead of just in the United States, or ETFs actually. But let's live with where Americans are. Most Americans are comfortable investing in U.S. funds. Total stock market, Fortune 500, S&P 500, that kind of stuff. So we're at a point where the U.S. market is really, really valued. Some people would say overvalued, and that it's priced now for perfection. So the question is, am I selling anything right now? Because to me, the market looks overpriced. No. And the reason is, I'm in for the long term. I'm not putting money in there that I'm worried about being able to use next year, the year after, whatever. I have a long investment time horizon. And so if you know that, that should give you more peace of mind. Recently, I alluded to something that we have a story about the stock market and is it overvalued and all that. I mentioned dollar cost averaging, and that's in our article too at Clark.com. Should you sell or stay put in the stock market? It's the title of the article at Clark.com. And it's because it's a react to what all that buzz is right now. The sky's going to fall. Sky's not going to fall. But values could. And the question is, what do you do when they do fall? If you're in for the long haul, you stay put. But if it makes you really nervous with any money you have that you could put in the market, dollar cost averaging is kind of like taking a sedative. It calms you down. And that's what sedatives do, right? Okay. Anyway, so what you do is with dollar cost averaging, you just steady as you go. 401k is a form of dollar cost averaging because money goes in as contributions are taken from your paycheck, and then they're invested in whatever you put them in the 401k. So over time, when share prices are up, you buy less shares. When share prices are down, you buy more. It lowers the short-term risk and eliminates a lot of the anxiety. So, yeah, the market's going to correct. Yeah, the market could have a bear market, which means it goes down 20% or more. But in most years, as you'll see in our briefing on Clark.com, the market has down years, but has a lot more ups than downs. So when you jump out and you say, I'm going to wait till it's safe to be in again, what happens is you miss so much of the run-up because you don't feel safe again till the market has spent a lot of time going back up, and you miss the updraft because you sold out because you were worried about the downdraft. So my thing is, remember what the money's for, when you're going to need it, and stay the course. Here's something I want you to think about if you have been worried about this. When did the market last fall by a big amount? Don't remember, right? When did it fall by a big amount before that time? You don't remember. Don't remember. When before then? It is normal for investment markets to be overly exuberant for a while and then overly pessimistic for a while. But if you believe in the free market system like I do, being an owner of enterprises is how you create long-term wealth. For most of us, that doesn't mean owning a company. It means owning shares in a company, and you benefit from the increase in value. Now, the reason I'm into these funds, index funds and exchange-traded funds, that kind of stuff, instead of owning individual stocks, is companies have their day in the sun. And then even the greatest companies sunset. So you never know when today's hot company becomes tomorrow's cold one. And as human beings, we're really bad at knowing when has the tide turned on a particular company. So when I own hundreds of companies or thousands in a single fund or exchange-traded fund, ETF, then I'm not worrying about a particular company rising or another one going down. What's in now, NVIDIA is like the big hot thing at the time. Anyway, all I want to do is ride with the free market here and overseas. That's my thing. That's my game. And if you're into latest hot stock tips, I'm not your guy.